What's going on, guys, and welcome back to the channel. And if you're new to the channel, my name is Jason. On here, you'll find videos on personal finance, investing, and money related topics. So if you're into that kind of stuff, be sure to hit the subscribe button down below so you don't miss out on future videos. And in today's video, I'll be ranking the 5 banks here in Canada from 1 to 5 based on their numbers from Q1 and Q2. So with that being said, let's jump right into the video. So first, let's take a look at the Bank of Nova Scotia. And as you can see, back in February, they were trading as high as $74.73. And with the pandemic, they dropped significantly down to $46.72 in March. And that was a decline of about 38%. But since their lowest price back in March, Scotiabank has been trying to come back up, but it's kind of been consolidating and it's jumped up about 16%. And if you take a look at the market cap for Scotiabank, they're at about $66 billion. And their 52-week high was at $76.75. And compare that to their 52-week low, which was at $46.38. And if we take a look at Scotiabank's beta, currently it's sitting at 0.87. And with the beta, it measures the stock's volatility in relation to the overall market. And if you were to take a look at a stock that swings more than the market over time, you'll see that the beta they'll have is over 1. And in this case, Scotiabank has a beta under 1. So if you're trying to make a quick buck out of this stock, it's not going to happen because in my opinion, this is a long-term hold. And if we take a look at Scotiabank's PE ratio, currently it's sitting at 8.96. And if you look below that, their EPS is 6.07. And as you can see, Scotiabank does pay a dividend of about 6.43%, which is really good if you're looking at dividend investing. And if we come down to their quarterly financials, you can see that Q1 of 2020, their total revenue was about $7.22 billion and their earnings were about $2.29 billion. And if we compare that to Q2 of 2020, their revenue was about $6.11 billion and their earnings were about $1.31 billion. And if we come below that, we'll see what analysts are saying about Scotiabank. And right here, you can see that from a scale of 1 to 5, they're at 2.5, which means they're in between a buy and a hold. And analysts think their price should be around on an average of $61.50. And if you look at it currently, it's about $54.44. And here, if we take a look at Scotiabank's forward PE, it's about 8.84. And if we look at Scotiabank's profit margin, it's about 27.87%. And looking at their return on equity, it's about 11.3%. And if we take a look at Scotiabank's payout ratio, it's about 68.39%. And right now, their 5-year growth rate is not looking the greatest because it's negative 3.17%. And as you can see, they've been growing their dividends for the last 4 years. So overall, looking at the Bank of Nova Scotia, as a whole, I still believe this bank will rebound back to where it used to be, but obviously it will take time because of the pandemic, and I truly do believe in the Canadian banking system in the long run. Okay, so next up is Toronto Dominion Bank, also known as TD Bank. If you take a look at their year-to-date chart, you can see that the highest their price went was $57.31, and that's right before it collapsed due to the pandemic, which dropped about 41. And since then, the price has come up a bit, about 29%. And if we take a look at the market cap for TD Bank, it's about $78.65 billion. And looking at their PE ratio, it's about 10.42. And if we look over to their 52-week high, you've seen the prices go up as high as $59.55. And looking at their 52-week low, the prices have been as low as $33.74. And looking at TD's beta, it's at 0.69. And if we look below that, their EPS is 5.7. And just like Scotiabank, TD also pays a good dividend of about 5.18%. And looking at their quarterly financials, you can see that in Q1 of 2020, their revenue was about $9.69 billion and their earnings were about $2.99 billion. And right next to it, if you look at their Q2 of 2020, their revenue had dropped down to $7.31 billion, as well as their earnings have been dropped to $1.52 billion. And if we take a look at the analyst rating on a scale of 1 to 5, currently it's sitting at 2.7, closer to that hold. And the price target suggested by analysts say the average should be about $63.33 compared to where it's at right now, about $59.48. And looking at TD's forward PE, it's at 10.45 and their profit margin is about 29.23% and the return on equity is about 11.9%. If you take a look at the dividend summary, They have a payout ratio of about 62.09%, and their 5-year growth rate is actually in the positive compared to Scotiabank, and it's sitting at 7.93%. And TD has been growing their dividends consistently for the last 4 years. Overall, I personally like TD Bank over all of the banks in Canada, just because I think they're well diversified compared to everyone else. Next up is the Royal Bank of Canada, also known as RBC. And if we take a look at RBC's year-to-date chart, we can see that the highest their stock price was at $109.21. And at the worst of the stock market crash during the pandemic, the stock price dropped about 34%. And since then, the price has jumped back up about 26%. And if you take a look at RBC's market cap, they're at about $129.8 billion. And their PE ratio, they're currently at 11.68. And looking at the 52-week high, the highest the stock price went was $109.68. And right below that, if we take a look at the 52-week low, the lowest the stock price has been is $72. And RBC's current beta is at 0.72. And right below that, their EPS is at 7.81. And just like Scotiabank and TD Bank, RBC also pays a dividend of about 4.64%. And if we take a look at their quarterly financials, you'll see here that Q1 of 2020, their revenue was $12.42 billion and their earnings were $3.5 billion. And in Q2 of 2020, all of that dropped significantly, where their revenue is $7.5 billion and their earnings are about $1.48 billion. And taking a look at what analysts say about RBC, on a scale of 1 to 5, currently they're sitting at 2.2, which is a buy. And taking a look at their price targets, they should be at an average of $98.25, but currently, like I mentioned, they're sitting at $91.20. And if you take a look at RBC's profit margin, they're at about 27.33%, and their return on equity is 13.73%. Looking at RBC's dividend summary, they have a payout ratio of 60.04%, and their 5-year growth rate is 3.57%. And RBC also has had a consistent dividend growth for the last 4 years. Overall, I think RBC is a great stock to invest in, and it's definitely one to hold for the long term. Moving on to the Bank of Montreal, also known as BMO. And if we take a look at BMO's year-to-date chart, the highest their price has went was $104.43 back in January. And with the pandemic hitting, from January to March, that was a drop of about 46%. And since March, BMO has jumped back up about 26%. And if we take a look at BMO's market cap, currently they're at about $45.25 billion. And their PE ratio is at 9.44. And looking at BMO's 52-week high, the highest their price has been is $104.75. And right underneath their 52-week low, the lowest their price has been is $55.76. And looking at BMO's beta, it's right on the dot at 1, which is a bit higher compared to the rest of them. And BMO's EPS is at 7.49, and BMO also pays a dividend of about 5.75%. If you take a look at the quarterly financials for BMO, Q1 of 2020, their revenue was about $6.4 billion and their earnings were $1.5 billion. And compare that to Q2 of 2020, where their revenue came down to $4.15 billion and their earnings also came down significantly to $689 million. And looking at what the analysts recommend for BMO on a scale of 1 to 5, currently it's sitting at 2.9, which is right at the hold position. And their price target predictions are at an average of $76.09 compared to what they're at right now, which is $70.74. And looking at BMO's forward PE, currently they're at 8.77, and their profit margin is sitting at 22.13%. And BMO's return on equity is at 9.62. And if you take a look at BMO's dividend summary, their payout ratio is about 60.13%, and their 5-year growth rate is 1.96%. And BMO has been consistently growing their dividend for the last 4 years. Overall, I personally think BMO has been hit the hardest when it came down to the pandemic. But again, just like the rest of the banks, I truly believe in BMO as well, in the long term. Last but not least is the Canadian Imperial Bank of Commerce, also known as CIBC. And if we take a look at CIBC's year-to-date chart, the highest their price was trading was at $110.62. And when the pandemic hit, their price fell about 39%. But since then, their price has quickly jumped up about 33%. Currently, BMO's market cap is about $40.12 billion, and their PE ratio is 9.90. If you take a look at CIBC's 52-week high, the highest their price has been is $115.96, and on the flip side, the lowest their price has been on the 52-week low is $67.52. And looking at CIBC's beta, it's at 0.96, and right below that, looking at their EPS, it's currently at 9.1. And CIBC also pays a nice dividend of about 6.28%. And taking a look at CIBC's quarterly financials, in Q1 of 2020, their revenue was about $4.59 billion and their earnings was about $1.21 billion. And you compare that to Q2 of 2020, where their revenue dipped to $3.17 billion and their earnings got hammered down to $400 million. And taking a look at what analysts recommend for this stock on a scale of 1 to 5, currently CIBC is sitting at 2.8, so they're very close to the hold position. And their average price targets are about $93.38 compared to what they're at right now, which is $90.13. CIBC's forward PE is currently at 8.85, and their profit margin is sitting at 25.24%. And their return on equity is at 10.83%. And taking a look at CIBC's dividend summary, their payout ratio is about 67.41%, and their 5-year growth rate is sitting at 3.58%. And just like the rest of the banks, CIBC also has been consistently growing their dividends for the last 4 years. My overall thought on CIBC is that in time, they will come back to where they used to be, but just like BMO, they got hit really hard when it came down to the pandemic. And personally, out of the 5 banks, I believe TD is number 1, followed by RBC, then Scotiabank, then BMO, and finally then CIBC.